asking questions so that I can answer the questions as well. So good evening to everyone. Okay, super happy 2024. And I want to share a few questions. Okay, first question by Michelle. She's asking, not sure whether this is the right place to ask. So many speakers, so many webinars, not sure where to get started. Any of you guys also feel overwhelmed and also not very sure where to get started? If you are similar to Michelle, please help me type M for Michelle. Now, I mean, it's very, very common. There's so many tools out there. I'm not going to say which tool is the perfect tool because there isn't one. It is seasonal and it's also based on individuals. Some of us will maybe better property investors. Some of us may be better stock investors. But the principles of wealth creation is the same. Okay. Okay. Thanks, Casper, for mentioning. Thanks, Osin. Okay. The principles of wealth creation is the same. In the sense, right, I would say that, well, you have to look at the numbers, the feasibility of how is this investment going to get you become more profitable? How are they generating amount? So this is what I'm going to suggest. Okay. What I'm going to suggest is this. I'm going to suggest that if you are not sure where to get started here because it's a free resources and you can start to accumulate dividends income. Can you please type D in the chat? And let me share with you the reason for that, okay? Because ultimately our goal, okay, is to become superhumanitarians. We talk about the 10 levels of wealth. And the 10 levels of wealth, right? We want to start building passive income. And dividends is one of the easiest way because after you buy a stock and they give you dividends, voila, you get the passive income. It may not be the fastest way or the best way, but it's the easiest way to get started. And as you purchase and accumulate more and more stocks, you become a little bit, I would say, sharper. Because starting is very difficult to learn everything. But once you get started, you have some money inside the stock market, you purchase some assets. And by the way, dividend stocks, you can go as low as $10, $15, but you get into the game, you learn the best when you are doing it. How many of you guys agree? If you agree, you can type A. Now, by the way, feel free to not agree because I don't know everything. I don't know everything, okay? It's just my suggestion for you to get started, okay? So this is something that I really, I mean, if my friend is asking me, sitting across the coffee table, I say, hey, just start to accumulate some stocks. Wow, but stock market is so scary. That's the reason why we're providing this information to help everyone, okay? So now, the next thing is, I'm going to share this, okay? So actually, I came up with this particular spreadsheet, which is for us to accumulate. So let's say I bought some Netflix, I bought some Citibank, and they give me how many dividends. Just purchase a bit and a bit. Every month, set aside some I would say, savings and purchase your first stock. Second month, buy the second stock. Third month, buy another stock. This is not the most optimized way to invest, but it's the easiest way to get started. And you have diversification. And when you buy portfolios of stocks, that's where I can guarantee you, you will sure lose money in some of them. But you think about it, okay, maybe I just assure you guys this. If let's say I have 10 stocks, and maybe out of 10, 5 of them lose money, 5 of them make money. Overall, what is going to happen? Now, a lot of times, if you realize, right, if you invest $100 in this stock, the maximum you can lose is 100. But if you invest $100 in this stock, what is the maximum you can win? It is unlimited. There are some stocks from $100 can go up to a few thousand. So you understand? Now, it's just like another case, right? Let me explain to you. Imagine you are in a classroom with your classmate and they are all starting up their own business. And they tell you, hey, Sean, or hey, Gary, or hey, Rosalind, can you invest into my business? And assuming their business just need $100 to invest in, and you just lend $100 to, let's say, 100 of them, you just need one of them to become the next Elon Musk or the next Jeff Bezos, the next Amazon. You become a multi-millionaire. Does it make sense, guys? So a lot of times, just to assure you, you don't have to be correct all the time. In fact, there's no investor that's correct all the time. Even Warren Buffett, he bought 300 over stocks in his lifetime, and right now only 10 is making him a billionaire. So think about it, Out of 300, if he's only correct 10% of the time, there's 30 stocks. But it's not even 30. Only about 10 of them makes him super ultra rich. Now, how many of you are learning something already? If you're learning something, you can type me, okay, or tell me what you have learned. It's very important, okay? Okay, now this is the next question that some of you are asking, correct? Okay, can you teach us how to calculate intrinsic value? So this is something, if you are interested, I can set aside one Saturday to maybe teach you guys because it is not easy to just teach over, I would say, using PowerPoint slides and just send it to you. Maybe I need to conduct a workshop. If you're interested, later I'll put a poll inside the Telegram group. In fact, I'll just put it right now. And let me know whether you guys are interested. Okay, if only one person interested, then I will send you some resources. But if you are really interested, okay, are you interested? to learn how to learn about valuation methods. Okay, so if you already are right, then after that maybe I can conduct a workshop for this. Okay, because it's quite tedious and not many people like I would say like calculation. There are a lot of shortcuts, you see. So some of the shortcuts is using price to book, which later I'll share with you guys, and also maybe using even guru focus discounted cash flow. But if you are a geek like me, you want to know exactly how to calculate, you want to calculate yourself, you are my good friend because I love to do that as well. Okay, we are a little bit irritating to some people, but let me know. Okay, so this is the second thing. Now, third thing is this. So Kobing is asking, US stocks are taxed 30%. Okay, the thing is this, if you are a non-US resident, you're in Singapore, if you buy stocks and they pay you $1, right now Biden or last time Obama or Donald Trump, they will take 30% as withholding tax. So they will tax you 30%. So meaning to say, right, you do have to calculate. Okay, how do you calculate, right? It's a very simple benchmark, okay? So let's say, right, if let's say you look at this particular stock and this stock is giving you 10% dividend yield. If it's giving you 10% dividend yield and it's a US stock, and you're thinking, should I invest in this US stock or should I invest in this Singapore stock? Now, this Singapore stock, right, is giving you, let's say, okay, let me put it into percentage, 7%, okay? Should I buy a 10% US dividend stock or should I buy a Singapore 7% dividend stock? They are the same, okay, in terms of all else equal. Does it make sense? Now, so you can go and calculate based on a particular simple table. Maybe let me just shift this down. Not easy to find a 10% stock. 19876543. I mean, if it's 2%, no point investing already, right? Okay, so that's why you can do a simple table benchmark. Oops, equals 0.7 times 2. Okay, this one shouldn't be in percentage. Huh? Okay, now basically, if let's say let me just erase this a while. Okay, hang on a minute. Okay, equals multiply by 0.7. So this is a simple calculation. Okay. Okay, if let's say you're comparing, should I buy US stock or should I buy Singapore stock? This is the benchmark. Just now someone was asking, right, what's the threshold, right, when we compare to a local dividend stocks? Same thing for Malaysia stocks. This is a similar benchmark. However, there's one thing to take into consideration, which I think Lim has mentioned. There is FX risk. So if you buy Singapore stocks, you get back Singapore dividends dollars. You buy Malaysia stocks, you get Malaysian ringgit. But you buy US stocks, they may fluctuate. So do have to consider this portion. So meaning to say, if let's say it's 10% US dividend and 7% Singapore dividends, which one is better? It is actually the Singapore one because at least the 7% is confirmed. The 10%, when the exchange rate come over back, it may not be equal to the 7%. So far, is it understandable? If it's okay, help me type okay. Okay, now, one more portion, right? So in that case, why don't we just invest in US stocks? I mean, sorry, Singapore stocks or local stocks? Let me explain to you the reason, okay? The reason is this. Now, this is the S&P 500 index for the past many years now, okay? And this is the dividends aristocrats. So I've set aside every Wednesday to talk about stocks that are dividends aristocrats. And these stocks are stocks that have been giving out increasing dividends for the past 25 years. So if you bought them 25 years ago, and let's say 25 years ago, they pay you $1 of dividends. The next year, second year, they pay you $1.10. Third year, they pay you $1.20, and so on, increasing, you know. And these stocks, right, a lot of people thought that dividend stocks, if they give out so much dividends, very likely they are not growth stocks. Reason being, right, if they are growth stocks, they would not have given out so much dividends. But these dividends, aristocrats, over the years, have been proven to beat other stocks, okay? However, I want to say that for the past 10 years, 2010 until 2024, okay, 23, 24, the thing is they have not beat the S&P 500, but you can see almost very near. So you can see, right, I want to share with you something interesting. I'm asking you guys to buy the dividends aristocrats, not really for their dividends, but for the fact that they have the ability to grow. Let me explain to you guys why. You must understand that when a company gives dividends, a lot of the people getting the dividends are people in the company. Granted, we are shareholders, we buy the shares, right? But do you know where does most of the dividends flow to? Most of the dividends actually flow to the C-suite level. And also most of the listed company in US, their employees do get shares as well. So the employees, when they get the shares, right, and a lot of times they are asked to lock in. If you are working for this company, you cannot sell the shares. If you sell the, I mean, I think usually not so strict, but at least if you're the C level, you're the higher management, they don't expect you to sell the shares. So if I cannot sell the shares, how do I make money from the shares? I make money from the shares when the company give dividends. So when the company makes more money and they give me dividends, right, I feel happy. It's like a bonus. So therefore, people working in the company, they are more motivated to push hard and make the company make money. Does it make sense? And when the company make more and more money, their share price also goes up. So that's why, based on historical, there's this guy called Jeremy Seagal. I may pronounce his name only, Jeremy Seagal. Okay, he actually written a book, right, and compare dividend stocks versus non-dividend stocks, right? Dividend stocks, historically, most of them perform better than stocks that don't give out dividends. Some of you are going to say, hey, but Berkshire Hathaway, Warren Buffett stock don't give out dividends. There's always outliers, but I'm talking about general public data. Does it make sense? Okay. So yes, and Benjamin also correctly mentioned, when you compare the US dividend stocks, even though they tax you 30%, right? Look at Singapore's past 5 years results. So you bought into Singapore stocks, right? 5 years ago, you invest into STI, your $1,000 would have turned into maybe $990. You would not have made money, you have lost money based on capital appreciation. Granted, they give you dividends, that's where it's covered, no problem. It's like a fixed long-term bond, okay? This is for STI. Where else, when you compare to the US market, right? If you invest $1,000, okay, 10 years ago, now they become near $4,000, and they also give you dividends. So even if if they don't give you dividends, okay, because it's taxed 30%, you are still making a lot more than investing in the Singapore markets. So this is based on data. Again, general market, individual Singapore stocks. Are there those that's doing very well? Also not a lot. Also not a lot. Unfortunately speaking, please don't scold me for this. For those who know me, you know that I love my country. I love Singapore. However, a lot of Singapore local companies, they don't do well when they try to expand overseas. Because I think Singaporeans, if you don't know, we are very, very guarded in some sense. And when we go out there, we are not as cunning or scheming than other people. Okay, so I mean, it's good time to learn. So unfortunately speaking, this is the portion. Okay, so that being said, I hope they have answered most of the questions. Continue to ask in the Telegram. I would love to answer as much as possible. Yeah, oh yes, Stocks for the Long Term by Jeremy Seagal. Did I pronounce it correctly? I hope that I didn't pronounce it wrongly. Please read more books as well. We will be doing some book reviews as well, okay?